Well, hello and welcome and hello. My name is Danny Deals. Thank you for tuning in to Un Poco Mas, the show where we give you just a little bit more. Today is July 28th, 2023. It is a Friday. It's 10 a.m. out here in beautiful Los Angeles, 1 p.m. out in NYC. Hope it's a great day wherever you find yourself. Guys, the Sofi stock on the day is up 36 cents or about 4%. We're seeing a classic mountain and hump pattern on slightly increased volume, about 31 million shares trading hands today. Previous close was $9.09, gapped up to $9.36. Popped right up past 940 to 944, traded down on the mountain and then came sideways on the algo all the way back down below 920 to 919, 918 range, then popped right back up again very quickly to almost 940. Topped out on the day at $9.55 and has traded sideways and down since that point, pulling back just a little bit here as we approach the top of the hour. Guys, what are we looking for? Basically, earnings are Monday. We all know that. In this video, I want to go over Steven Fiorillo's new article on Seeking Alpha. He is my number one SoFi guy. He does that weekly podcast with future investing and those two other dildos. I don't really care about those young guys. They read a lot. Steven Fiorillo is like a very intelligent, plain spoken, reasonable investor. He looks for deep value, long term, and this guy is extremely intelligent and knows his stuff. Just to give you some of his background, this doesn't really tell the story, but on Seeking Alpha, he's a 4.5 star out of 5 star, a number roughly 3,000 out of 25,000 financial bloggers and 5,000 out of 35,000 experts. His success rate on his trades is 59% out of 349 trades, and on average, he returns 2.9% per transaction. And 1 year, you'd result in 59% of your transactions generating a profit. He's also a big Tesla guy. He covers many stocks, and he is extremely intelligent, guys. Just to show you, like, this show, a lot of it is based upon the Psychic Friends network. That's where I get a lot of my advice, guys. If you remember my last few videos, I drew this target, this blue X, coming around the earnings report where all of these lines would meet, and lo and behold, guys, I'm not a psychic, but I mean, come on. I drew this a few days ago, and literally it has come back up exactly to the X that I drew and is sitting there taunting all of you turds who say, I don't know what charts are, I don't know what technical analysis is, I don't know what the stock's going to do, wedges are for idiots, all these lines I draw are just stupid. Okay, I mean, we'll see who makes money at the end of the year and who doesn't. That's all I can say, guys. I view myself a little bit like Steven Fiorillo. I'm obviously not that accomplished or intelligent as he is, but my investing sort of methodology is very similar. I don't care about short-term price action other than to add. I don't believe in FUD. I go to numbers, guys. And one of the things I like to point out, like, over and over and over, and this is the article, July 28, 2023. And again, I highly recommend Seeking Alpha. I think they have, out of a lot of the really well-known websites that cover stock, I just like their authors and their analysis the best. This is SoFi Technologies up over 100% year to date. I expect a triple beat Monday pre-market. And guys, just before we get into this article, take a look at the options. They're just holding off those $9.50 and $9.50 call options, and that's where the bulk of the action is, guys. There's 5,000 calls at 9 and 10, sort of bookending that, but then at 9.50 there's 20,000 calls. And those are up 25% on the day. Those $9 calls and 8.50 calls are just absolutely screaming today. There's quite a bit of action at 9. Of course, the $10 calls are getting killed and are down 50%. Stock at $9.48. And if we just zoom into the 1 day, we can just see what kind of price action we have going on today. Yeah, it's basically very, very strong. Anytime we're seeing a little bit of a lull here in the last little while, we're seeing, some big green candles. Obviously, the algo is working. You can see that in the trading, just the way it's kind of barcoding in these very small, ranges, little 1 cent ranges. But again, guys, this is what we thought was going to happen. They're just, I told you in the beginning of the week, like last week, I thought it was going to run past 10 and it was going to be another pump and then a dump after earnings. I think market makers completely reversed it, completely did a crazy Ivan because this time they want to go long after earnings. I don't think there's going to be a short attack after the ER because I think the ER is going to be a tremendous beat. But again, guys, a lot of you guys that like to make fun of me because my beard is unkept and I don't have indoor plumbing, you show me your chart that you drew in advance over and over and over that predicts the price action almost exactly because I've been doing it for months. And you can go back and watch it, and then you can call me a big fat liar and an idiot. And you will do that anyway, but you may be right or wrong. You may be right. I might be crazy. But guys, SoFi has overcome challenges, strengthened its position with shares rallying over 100% since Q1 2023 earnings sell off, diversified its revenue streams. Management has made strategic decisions, such as holding loans instead of selling them to generate higher returns and increase interest income. SoFi has been a battleground stock throughout the investment community. Shares were 477 fair value accounting model. Wedbush reduced from $5 to $2.50. The downgrade didn't age well because he's an asshole. Where Andrew Jeffrey from Truist Financial Corporation, Mizuho's Dan Dolev made CNBC appearances discussing their bull cases for SoFi. Anthony Noto delivered a 34-minute fireside chat at the JP Morgan Technology Media Communications Conference. That was a changing point for many and has made several appearances on CNBC discussing why SoFi will be a top 10 financial institution. Since the sell-off, SoFi has rallied over 100%. Dan says, I can't time markets, Steven, I'm sorry, I'm Dan. I can't time markets perfectly, and I have been bullish on SoFi the entire way down, and while SoFi has jumped over 100% from its lows, it is still significantly lower than the $25 level it reached in 2021. I expect another triple beat Monday morning, and for shares of SoFi to continue higher. Guys, note the bulls, people who actually analyze the data, they have all kinds of graphs and data and numbers backing up what they say. And the bears and the turds and the shorts who downgrade the stock, they always have what ifs. What if the defaults are going to increase? What if the growth stops? Blah, blah, blah. But they never bring receipts because they don't have receipts, because the bulls have receipts, because SoFi has been absolutely killing it for the last 2 years under extremely difficult conditions. Guys, let's go on with Steven Fiorillo here on Seeking Alpha, July 28th, 2023. It's Friday and earnings are coming up on a Monday. Let's just double check. Stock is 36 cents up 4%. So still trading flat in that sort of modified mountain and hump pattern. Guys, SoFi has navigated a treacherous environment and become stronger in the process. This is what I've been saying, guys. Trial by fire. Steven is a shareholder. He tries to be neutral. He's a long-term investor. Accept responsibility of diminishing returns when things don't go as planned. Not a trader. Rarely invest for short-term opportunities. All that's the same as me, and all that is what you have to be if you're going to invest in SoFi. Trading this thing around earnings, swing trading it, to me is just stupid. It's too unpredictable. Market makers have too much control over the stock and they can attack it whenever they want. There's just not enough institutions in the stock yet to stabilize and prop it up under attack. I invest in what I believe are long-term opportunities, and no matter what company it is, from Apple to SoFi, declines in share price are part of investing. Unless my investment thesis has changed, I won't exit a position. I'm likely to DCA into weaker periods of weakness. How companies respond to adversity, unforeseen obstacles become a testament to management's ability to handle stress, make critical decisions, and deliver solutions to problems. Nothing goes perfectly to plan in life, and the same is true for business. For me, many long term opportunities are built upon decisions that are made in periods of adversity. By now, everyone knows the story about SoFi's largest revenue and profit center, student loans, being impacted student loan moratorium more than 3 years ago. That event was outside of SoFi's control and put management in a sweet sink or swim situation. Going into the pandemic, student loans were SoFi's largest component of loan originations, 68%, in fact, in Q4 2029. Student loan originations grew from Q2 2019 to Q4, surpassed 2.4 billion, then dropped off a cliff, declining 68% from 2.44 to 788 million in Q2 2020. Student loan originations came in over 1 billion per quarter for 5 consecutive quarters in 2019 and 2020. And then, obviously that fell off a cliff, guys. You can read these, the revenue from lending, technology, and financial services. This is this graph. I'm not going to click on all the graphs and show them to you. You can do that yourself, but you can see that lending has just been on a tear, steadily growing. Financial services had been on a tear, steadily growing. Technology had been growing moderately, but has been flat, basically since Galileo Technesis ramped up. So the lending segment accounted for 96% of SoFi's revenue in 2019 to 2020, Q1 to Q1. I want that to sink in for a moment. Going into Q2 2020, lending accounted for more than 96% of SoFi's revenue, and student loans, which accounted for more than 60% of total originations, was impacted. So 96% of their business, 60% of that got screwed, guys. I will speculate that this is really important, guys. Listen to this. I will speculate that some management teams wouldn't have been able to handle the pressure and come up with solutions quickly enough to mitigate the damage. Management put SoFi in a position to significantly grow its personal loan and home loan book to offset the impact from student loan originations operating at half mast. Both were trending upward. Then the Fed started aggressively raising rates, correlated to higher mortgage rates, and stopped home loan originations dead in their tracks. SoFi was able to grow its originations by growing the revenue this segment generated, consistently achieving all-time high quarterly records. In addition to growing revenue from origination, student loan revenues capped. SoFi grew technology, financial services. Since Q1 2020, SoFi grew combined quarterly revenue generated by technology and financial services by 4,945%. 5,000% growth in those two segments, from 3.15 million to 158 million in quarterly revenue. Extraordinary, guys. I realize that's still a relatively small number, but the growth is incredible. Keep in mind, SoFi is a young company that just received the bank charter in winter 2022. Pandemic started in Q1 2020. SoFi has grown its quarterly revenue by 434% since Q1 2020. SoFi has grown its quarterly revenue by 434%. You just do a mic drop there and walk off, guys. That's through the pandemic when their major source of revenue got completely pulled out from under them. So 434% growth in 3 years, guys. Think about it. Let it sink in, turds. This has led to a 141 million swing in adjusted EBITDA, as SoFi was minus 66 million in Q1 2020 compared to positive 75 million in Q1 2023. Again, extraordinary. I went into my SoFi investment knowing that it would take years for the story to unfold. Student loan moratorium being extended for 3 years, wasn't counting on that. SoFi overcame every hurdle. Those who have still been bearish on SoFi are simply not paying attention to the accomplishments and aspects SoFi is getting right. Member numbers, product use, and deposits wouldn't increase Q over Q if their product suite didn't satisfy their end user. That's it, guys. People keep referring, people keep adding, people keep doing more products, people keep moving more, and more people keep coming to SoFi. If people didn't like it, it wouldn't keep growing. It's just that simple, guys. People vote with their dollars. In this case, more people use SoFi to get their money right every quarter. The end judge isn't me or Wall Street analysis. It's the end users who utilize the SoFi ecosystem. The end user is speaking loud and clear. Membership grows, deposit grows. There's no reason to believe this management team won't deliver on their goal of becoming a top 10 financial institution in the United States. Adjusted net revenue and adjusted EBITDA. Guys, basically, EBITDA was almost nothing up to 2022. We've seen rapid growth. Remember, guys, Q1 2021 adjusted net revenue was just over 2 billion. And then now, or I'm sorry, 200 million, apologies. And now it's like 400 and over almost 500 million. So in 2 years, guys, we've seen top line more than double, adjusted net revenue, excuse me. Not pure revenues, but adjusted net revenues gone from just over 200 million to in Q1 well over 400 million. So, guys, 2 years more than double your top line. Again, facts over FUD, statistics. Go to the ER, read the source materials. Do not believe these bare turd lying sacks of shit who come out with FUD and speculation. They have no statistics, they have no receipts, they cannot show you the growth has stopped because the growth hasn't stopped. They can't show you all these defaults because there haven't been the defaults. All they have is FUD and speculation and what ifs. If ifs and buts were candy and nuts, you know, I'd smack you right in the head. Holding loans versus selling loans. There are several of us that follow SoFi closely and do a weekly podcast. Again, I would recommend that. I think that's Future Investing or SoFi Weekly. You can find it on YouTube. Just search for Steven Fiorillo pod. You know, you could find it very easily. He's well known. Part of the bear case that has been SoFi's holding loans on its books. There isn't a market to sell them. In the JPM Fireside Chat, Anthony Noto decimated the bear case around this idea, and I debated a SoFi bull on holding versus selling loans. In fact, in Q1, SoFi reported charge-off rates of 2.97% and factored in a 4.5% loss in its marks, which is below its actual tolerance level of 7 to 8%. Guys, if you read this article, read this part 2 or 3 times. When SoFi marks a loan based on held for sale on its books, they assume a loss for the loan and actualize it over time. SoFi discussed a loss rate of 2.97% at the end of Q1, but built a 4.5% loss rate into its model to account for losses in the economy. When a loan on SoFi's book is delinquent for only 10 days, they write it down by 35%. 10 days, they write off 35% of the loan. When it hits 30 days, it gets written down by another 35%. So after 1 month delinquency, guys, they already write off 70% of the loan. When it gets to 90 days reach, SoFi writes down 90%, and then the loan is completely written off at 4 months. So, guys, they're not holding a bunch of bad loans and just letting them rot on the books. They're getting rid of 70% in the first month, taking that write down. So, guys, they're on top of the situation. They're taking their medicine. They just don't have to take that much medicine because defaults aren't that high because they lend to such high quality customers. 749 average FICO score. Okay. $164,000 average income. Okay. Guys, people who apply for their personal loans, they reject 70% of the applicants because they simply don't qualify. They take the best of the best. Best of the best. They're the best around. Nothing gonna save. If you guys seen the movie Rad, where they race BMX bikes, that is just pure awesomeness. And the South Park parody of it is even better. Anyway, guys, back to these loans. SoFi has $3 billion in equity, $5 billion in unused warehouse lines of $8 billion. So not even close to halfway on those. 60% still available, and 10 billion plus of deposits that can fund loans. Management's job is to create the largest amount of return on equity for its shareholders. The fact that SoFi wasn't selling its loans doesn't mean there wasn't a market to do so. Management made the decision to generate 6% by holding rather than 4% by selling. In doing so, holding loans places SoFi's return on equity at roughly 43% versus the high 20s area had they sold the loans. So they're making way more return on equity. This has also allowed SoFi to increase its interest income from $50 million a year ago to $200 million from lending, which will continue to grow from lending and holding loans. And that'll only go up more, guys, with the interest rate hikes. That's just a fact. People are talking about, oh, the student loan originations aren't going to be 200 billion, that opportunity, because interest rates are going higher. That's driving, people out of the student. But those student loan originations don't make that much money, guys, compared to this net interest income. Look at the increase from 50 million a year ago to 200 million now. That's only going up with more loans, with more interest. That's going to more than offset the student loan originations. The student loan originations are important just to bring people into the wheel strategy. Pardon me. I went back to Q1 2019 and mapped out the lending segment's adjusted net revenue and contribution to profit on a quarterly basis. When I look at the overall growth, I am pleased. On a quarterly basis, SoFi it's grown its adjusted net revenue in the lending segment by $231 million or 245%, and its contribution profit from lending by $187 million or 817% since Q1 2019. Look at those numbers, guys. It's insane. The growth here is just insane. People want to assail the growth story. It's all FUD. It's all bullshit. It's all turds. It's all the Chia Pet army. It's all shorts. They're lying to you. They want you to trade emotionally. They don't want you to hold SoFi long term and lock up these shares because they want to buy them cheap. Okay? They want to scalp you. They want to skin you. They want to send you home, send you to a room with no supper. They want to eat your supper. Okay? Then they want to eat your dessert. Okay, SoFi has a team of actuaries building their internal models, and currently holding loans falls within their risk profile. And SoFi doesn't need to sell loans. Management has discussed their selective loan process at length, and they see roughly 70% of applicants get declined that apply. They decline 70% of applicants. They send those turds over to a firm and Upstart and Lending Tree and Lending Club and all this bullshit, and they let them take on those crappy customers. Management has a mandate to generate value for shareholders, and if they can generate 6% from holding rather than 4% from selling, I want them to hold the loans. Management has not given me a reason not to trust their judgment, and if they feel holding loans provides additional return on equity, that's what I want them to do. And guys, here's the lending segment adjusted net revenue and contribution to profit. The growth here has just been incredible, particularly the last 3 quarters on the top line, adjusted net revenue. Contribution to profits also been very strong, but the last 2 quarters were kind of flat. I'd like to see that move up again. What I want to see from SoFi in Q2 2023 in the future to be a top 10 financial institution. This is all the same stuff I totally agree with. I think Steven's been watching my videos, or vice versa, or I copy all his stuff. I don't know. My wish list for Q2 is a triple B Galileo accounts exceeding 133 million, members exceeding 6.07 million, deposit inflows to exceed 2.25 billion. On the triple beat, I want to see 485 million plus in revenue, 65 million plus in EBITDA, and 2023 guidance raised again. Anthony Noto has declared that SoFi will be GAAP profitable by Q4, and in Q1 they lost 34 million. So I would like to see this metric improve to at least a loss of 20 million. I have suspicion that SoFi will deliver on everything I have outlined. And look at this, guys. Non-GAAP guidance, adjusted EBITDA 2021 30 million, 2022 143 million, and 2023 guidance from about 268 to 288. So they're looking at doubling EBITDA. Look at the EBITDA margin, minus 7%, 3%, 9%. This year guidance for 14%. Guys, that's extraordinary. 2021 EBITDA margin 3% to 9% to 14%. They're shooting for 20%, guys, and they're going to get there because this management team kicks ass and they take names. Okay, and those names are Wells Fargo. Those names are B of A. Those names are Chase. Those names are US Bank. Those names are the credit unions. Everybody. They're taking customers from everybody. Other fintechs. Best of breed. Best of the bunch. SoFi has made tremendous progress getting to this point, but the work is not done. Become a top 10 institution. SoFi will need to... I've been saying this too, guys. Establish a business segment. That's why you can't go to them for your only banking. So many of us have business needs, business checking and savings, business credit cards, business loans. Those are no-brainers, guys. All they have to do is just take the existing software they have and just rebrand it for business. It's the same damn product. A business credit card and a business checking and business, they work the same as personal, basically. It's just you're lending to a business. You got to have other credit profiles, risk profiles, and stuff, but they can handle it. Overhaul investing platform. Guys, we need a platform to compete with other brokerage. Guys have Robinhood. Guys have Webull still because our platform sucks. It sucks, Noto. It's coming around the bend. She'll be coming around the mountain when she comes. Not good enough, turd. Push that thing out. You own Galileo. You own Technesis. Push it out. Update it. Real time. Over the air. Rodeo, 529 plans, asset management arm, wealth management, retirement plans, business segment. Guys, I'm not going to go through all this word by word. You know what this is. It'll bring in customers. It'll allow them to keep everything at SoFi. A lot of people have business needs, investing platform. Again, SoFi is a position to capitalize on Liz Young being a member of the CNBC team. She's on there all the time. It'll give people confidence. They'll build a 2.0 platform. So investing... in a short media produced the way Josh Brown and Reinhold's Wealth Management have taken over YouTube, the more time people spend on investing platform, the better. Asset management arm. Once again, I want to see SoFi expand on Liz Young being on CNBC. She's a huge asset. She's intelligent. She's beautiful. She's photogenic. I know a lot of guys make a lot of stupid comments about her, but come on, guys, let's recognize her for what she is, which is a great asset to SoFi. Not just a pretty face, guys. Don't be so shallow. Like SoFi is reaching out to women in business, and whatever a woman looks like, it should be. We should really judge them like men. I know we're all superficial pigs and turds, but Liz Young is extremely intelligent. She's young, and she's going to be a great asset to SoFi for decades to come. I certainly hope. And they're talking about taking advantage of that to become an asset manager. Let's bring in the wealthy, guys. Let's bring in the wealthy, like JP Morgan's private client, Merrill Lynch, investment strategies. B of A has this too. I'd like to lead asset management fees, generate ongoing reoccurring revenue. In addition to wealth management, I want to see SoFi become a corporate retirement sponsor like Vanguard and Power State Street, get asset management fees deducted each quarter from my 401k, and it gets deducted by clockwork. SoFi could be making those fees. Every 2 weeks, money goes into S&P index fund. The institution has yet to hear from me. They get their fee every quarter. So this would benefit on the business side. Companies would have all of their needs from saving, checking, credit cards, lines of credit, loans, sponsored retirement plans in one place. Huge opportunity for SoFi to become one-stop shop for business as well as personal finance. So guys, the business angle is like half the world they haven't even touched yet. The whole world is out there. We're only basically in the United States at this time, guys. SoFi is just an acorn. It's a strong acorn, ready to grow into a giant oak, a top 10 financial institution. Rain down dividends and free cash flow on us investors and shareholders. Conclusion, I'm looking forward to Monday morning because he seems very happy in Anthony Noto's recent interviews. Is almost like he can't wait to deliver earnings. Mr. Noto is one of the only CEOs that responds to members directly on Twitter and is very engaged with what members want to see change. Student loans are set to return, and SoFi is on track to become GAAP profitable by Q4. I think we're going to get a modest guidance increase with a top and bottom line beat. I have no idea how the market will react, but if things are upbeat, I can see the rally continuing. And guys, this is just an incredible article. Again, Steven Fiorillo, he's focused on growth, dividend income, personal strategy revolving around setting myself up for an easy retirement by focusing on compound dividend and income growth. Dividends are a huge part of his strategy, but still he loves SoFi, guys. What does that tell you? He's not really a growth investor. Guys, we're down to 944, still holding on really well to this. This hasn't become a mountain and hump. It's become more of a mountain and plateau type of pattern, but it can turn into a hump or it can start to move up again. Guys, NASDAQ on the day up 243 points, 1.73%. SoFi up 33 cents, 35 cents on the day, 33 million shares traded. Volume has slowed down. Algo has taken hold of this thing. We have to see what happens here, guys, in the last 2.5 hours of trading. It is anybody's guess, but again, my chart, guys, I pegged this thing. It's so stupid. It's right on my X. Again, I just got lucky again, guys. I always get lucky. Picking stocks, making charts, finding a great princess, all of these things, they just sort of come to me. I had a vision. I said SoFi is not going over 10. They're going to hold SoFi down in advance of the ER, perhaps flip and let it run after the ER, which is going to be a fabulous triple beat, according to both myself, Danny Deals, Hurricane Lopez, Stock Karen, and the genius, in my opinion, of Steven Fiorillo over on Seeking Alpha. You can also find him on podcasts, on YouTube, and etc. If you listen to that guy, he has total command. He's just as good as Noto. If you want to talk about an analyst, about a blogger who knows their stuff and puts their money where their mouth is, again, highly encourage you to watch some of his videos, Steven Fiorillo, and to read this article and many of his others over on Seeking Alpha. Guys, taking a look at the short interest today. Let's see what these turds are up to. Cost to borrow max is pretty low, so that leads me to believe there's not a lot of shorting going on. Yeah, back at 15. Free float on loan continues to go down, as do shares on loan. Days to cover continue to plummet. Cost to borrow is low. Utilization is way lower, down 22% just in the last week. I don't believe shorts are nearly as confident as they have you believe. Borrowed change again, 2 million. This is just from the first little bit. Data hasn't really come in yet, but they're saying return shares are exceeding borrowed shares by 2 million shares, which is probably why the stock is going up on sort of this medium volume. Anything else interesting sort of here in the news? Again, if you do take a look at the volume of the stock, it's going up a little bit today. I think it was like 40 million yesterday. I can't really remember. Um, but taking a look at the overall overview of the stock, the order book, huge wall, not a huge wall, but a wall there on the ask at 950. A lot of action on the bid side. SoFi Technologies report Q2, what to expect. That's over on Tip Ranks. That's a really dumb article. I imagine you don't read it. What to expect, Zacks. That's another really dumb source. I invite you not to read Zacks. All they care about is like updates to the revisions to analyst estimates, which may or may not even be legitimate. Analysts can say things for any reason, their own reason, trading reasons, corrupt reasons, Chia Pet Army reasons, short turd reasons, short weighing reasons. And you just never know why they're saying stuff if they're being honest. And even if they are being honest, you don't know if they know what the hell they're talking about in the first place. Could be just as stupid as some big dope on YouTube. But volume's been increasing last couple days, guys. 38, went down to 35, but then back up to 46 million shares traded yesterday. I think we're going to exceed that here today. We're already at 33 million, but things have really slowed down. So it might be in that 45 range, could be in the 50 range. Just kind of depends what happens in the afternoon. I expect trading to pick up significantly in the last 2 hours of trading, but we'll just have to see how things go, guys. So far, we haven't seen the pump and dump. I think we saw a little bit of a dump and pump. So whether they pump it or attack it after earnings, guys, is anybody's guess. Steven Fiorillo thinks the rally could continue. I agree, but never be surprised to see the SoFi stock pull back and then a couple weeks after earnings. It's very often attacked. Guys, Upstart's up 8 points today. Affirm's up 4.6. So Fintech's doing quite well. Palantir up a lot. Robinhood up 3, PayPal up 2, Visa, American Express, MasterCard kind of holding around flat, a little bit green, a little bit red. But SoFi, with 2.5 hours left in the trading day, is up 38 cents or 4.13%. Looking to try to rally, push through that $9.50 resistance level. Obviously, market makers do not want to pay on those options as they've got out of them with their profit earlier in the week, and it's retail baggies, turds, schmucks, Johnny come latelys, jabronis, jamokes, and overall turds. Did I already say turds, guy? I think I did, but there might be two distinct sets of turds out there in my audience. Perhaps as many as 3 or 4. Perhaps 5 sets of turds. I know you guys are a diverse bunch. So, guys, that's the SoFi stock. Ticker symbol is SOFI. Earnings are Monday before the bell, guys, so we only have a couple hours left of trading, and then the aftermarket and, of course, the pre-market. Should be exciting, guys. I'm expecting a beat, not a huge beat. Looking for probably a 2-cent loss. A lot of people think that's a bit optimistic, but I think revenue might have grown a bit more than we expected, and margins might be even just a little bit improved because I think defaults are going to remain quite low. Guys, I'm out of breath. I've been talking forever. It's a Friday. I have to get some work done. Hope you guys are having a great Friday. Hope you all have a great weekend. Give me your thoughts on earnings down in the comments. Let me know what you think is going to happen, not only with the numbers on the ER, but with the subsequent price action on the SoFi stock. Guys, for myself, Danny Deals, executive producer, Hurricane Lopez, our spirit animal, Stock, Karen, and the rest of the team here at Strong Arm Trading. We would like to wish you guys a happy Friday, a great weekend. Hope all your investments are doing well. Hopefully SoFi turns in a great ER for us on Monday morning. Time will tell. We just have to wait and see. Guys, thanks a lot for watching. I'm Danny Deals. You guys have a great rest of your day. I really, really, really appreciate everyone who tunes in to my YouTube channel. Please comment down below. I've heard enough of myself. I drive myself crazy. I would love to get some of your thoughts if you'd be willing to share them. Thank you.